What's up, Trader's Edge? It's Mark Sebastian, your only option. And let's break down what happened on Monday. It was a bloodbath for the markets, and volatility blew up. So let's dig in. All right, so it was much worse on the open, but Monday was a really bad day. As I warned you, Thursday bad, Friday worse. Monday, you get the big, huge drop. We closed down 3%. We were down more than that, as much as almost 4%. But it's not like this was a major, major crash. The Qs actually did have it worse. The Qs actually briefly fell below the 200-day moving average. They were down almost 5%, I believe, at the lows. They did manage a recovery, but it was just a brutal day, mostly from the crowded trade that was the Magnificent Seven. Let's take a look at MGK. That is the 90 biggest names in the S&P. You can see how bad they took it. But it was just a bad day across the board. Apple was below 200 briefly. NVIDIA threatened 90. It touched its 150-day moving average. AVGO, another one that took it on the chin and bounced. One that didn't recover was Google. They lost a pretty big court case, closed below the 150-day moving average. That one looks like it's going to maybe break 150. Microsoft is way below its 200-day moving average. That thing has really fallen off. It's down. It's approaching 20%, down 15% right now. Meta looking pretty similar. So the pain is really coming from these 7 names, Tesla as well. The Mag 7 names are where the pain is coming from. It's not coming from the rest of the market. You look and, names like Procter and Gamble, they're fine. Johnson & Johnson, they're still doing all right. Now, they were down today, but, they look fine. We continue to see, strength in the boring names and weakness in the major names. But this was, in fact, a pretty aggressive vol event. The VIX topped out at 65. We have, since the 16th, VIX had slowly been boiling, really heated up on Friday, and then popped on Monday. We probably did see the high for the VIX. Now, the high for the VIX doesn't usually match with the low for the market. In fact, that almost never does. And VIX futures are telling us that things could continue to be ugly. We are in backwardation, and a pretty steep backwardation. The VIX closed 38, the future 31, and then September is at 29, October 28, November 24. So there is a pretty darn big bid for volatility. There's a lot of fear out there. This formation tells me the market is in turmoil right now. And I know I'm using that word on purpose, folks. So where does that leave us? Where do we go from here? Now, typically after a 3-day rout like we just had, you will see the market try and catch a bid. So it is entirely possible that we get a little bit of a bid back over the 150-day moving average. So we basically closed on the 150-day moving average for the S&P. That was the first time it had been there since November of 2023. So 10 months. But typically, there's more to this selling. Could we get a crazy face ripper? Maybe. But I don't believe that is in the cards. We're probably going to get a little bit of bounce. That bounce is probably a fade. So what caused this market sell-off? Well, everybody and their mother is talking about the yen and the pop in the yen and a carry trade. So the reason why these Mag 7 names have been so well loved, and I forget the gentleman's name that I was reading about this on Twitter. If I find it, I'll cite him next time. But he was kind of walked through the entire process. I was kind of aware of what was going on, but traders were borrowing yen, then they were cashing that in the U.S. markets, and then using those dollars to buy Bitcoin, Nvidia, Apple, you name it, stuff that was outperforming the interest rate that they were paying on borrowing that yen. And that trade with the pop in the yen started to experience a lot of pain and became a problem. And that is where that unwind. Now, I don't believe that unwind is done. If you look at where the yen is, it can go a lot higher. And you look at what happened with, let's say, Bitcoin on Friday. Bitcoin absolutely got crushed on Monday. It was down 8%. And so risk assets are just, they're really having problems. And we could continue to see some downside here. So what am I looking for from the stock market? Well, to get flat year to date out of the S&P, sorry folks, to get flat year to date out of the S&P, you would be talking basically, call it 4,800. 4,800 would be a pretty good line in the sand flat on the year. But I do believe at this point, with how fast we've moved, how strong we've moved, at this point, we're probably going to get to that 200-day moving average, which we have also not been to since November. So if we are going to continue selling, that's kind of my first target. Next target would be flat on the year. Triple Q, kind of a similar story. For it to get flat on the year, you'd be talking another, call it another 20 points. Nothing crazy, another 15 points, nothing crazy. It's already through the 200, or at least pierced it. I believe it will eventually get a close there. We'll get to flat in the year. That's going to be kind of interesting. So where do I go here? Of these major names, the two that I think are the most interesting in terms of playing them from the short side, probably Apple. And I'd be looking at, well, not a Tesla anymore. I'd be looking at NVIDIA as well. I think NVIDIA still has plenty more downside after bouncing off that 150. A little too much love there, a little too much fanboy hope there. That bubble is unwinding. If this yen trade continues to come off, there is going to be selling in NVIDIA, and that's going to pull it off. So now you're saying, Mark, what do I do if I'm scared and I want to hedge? One, I'm not buying puts anymore. Volatility is too high. So how do I hedge myself? Spreads. On Monday during our normal ticker highlight show, I walked through everybody how I would set up a inexpensive hedge using spreads. And that would be the way you have to do it. With vol as high as it is, being just naked a long option is going to be a huge problem. You have to spread it off. Buy one option, sell something lower against it. In terms of puts, you could also buy a VIX call spread. Speaking of the VIX, I know I've been talking about VXX, and the higher it goes, the happier I am. VIX continued to climb even as the market, after the VIX popped, it dropped to almost 30 and then began climbing again. VXX closed near the highs of the day. And I'm watching this thing go up and up and up, and I'm going to continue to watch it go up until my indicators say that it is safe to get in there and short. Same thing with UVXY, which is now in the 60s. I can't wait for this thing to start turning around. And UVIX. All three of these are looking really tasty for potential shorts once my indicators say it's time, and we are nowhere near that. I'll just give you a little hint on one of my indicators. I need the VVIX to get back below like 120 before I'm even interested in trading these things. I need to see realized volatility start to pull back. And the most important is the shape of VIX term structure. Just to bring it full circle, that VIX term structure says bad things are heading our way. Don't ever doubt VIX term structure. All right, folks, you want to join me in this VXX adventure? You can click the link in this email. If you're watching me on YouTube, like, subscribe, and ask me questions. I want to answer them. I hope you have a great trading day and a great trading week. I am Mark Sebastian. I am your only option. Have a good one.